Hey everyone, welcome back to another dividend investing video. Today we're diving into a topic that can really shake up dividend growth investing. That's Ozempic and other GLP-1 medication. These drugs are quickly changing the way people approach weight loss, and as they become more widely available, it does beg the question, what is the long-term effect on some of our favorite blue chip dividend stocks? I'm talking companies like McDonald's, Pepsi, Hershey's, and others. As someone who is personally taking a GLP-1 inhibitor and seeing the effects firsthand, I've got my own real-world insight to share. Now, if you're invested in these kinds of stocks, or if you're wondering whether now could be the right time to get into these companies, many of which have been hit hard recently and are undervalued, you'll definitely want to stick around for this one. I'm Nick, and this is the Dividend Growth Income Channel. Thank you for joining me today. I'm not a financial advisor or guru. I'm just a regular guy who wants to share my love of dividend growth investing and building financial independence with passive income. If you could, please do me a favor, smash the like button and subscribe to keep up with future videos. This helps us out more than you can imagine with the algorithm, so we can bring you more quality dividend investing content. GLP-1s, like Ozempic, are a class of medications that help control blood sugar levels and curb appetite by mimicking a hormone your body naturally produces. They were originally developed for diabetes management, but they quickly gained popularity for weight loss, especially in the case of semaglutide, which is the active ingredient in drugs like Ozempic and Wegovy. It's helping people lose significant amounts of weight, and as a result, many of us, myself included, are changing our consumption habits. Now, I don't usually get too personal on this channel, but I'll share a bit of my own experience. I've struggled with overeating and my weight for many years, and I've been a long-time consumer of brands like Pepsi, McDonald's, and Hershey's. But not too long ago, I was prescribed semaglutide, and since then, my consumption of those brands has decreased dramatically. This medication has changed the way I eat for the first time in my life, and I know I'm not the only one. I'm sure you probably know someone who has lost a significant amount of weight while taking these medications. It's a growing trend, and as more people take these drugs, they're buying less of these classic consumer products. And of course, the drug is still relatively expensive, and insurance doesn't usually cover these medications unless you're diabetic. So they remain cost prohibitive for many. But I think over time, the cost is likely to decrease. Insurers may become more inclined to cover these drugs, making them more accessible to a larger portion of the population. And there's no question the United States has an obesity epidemic. Now, one thing to consider is what happens when you stop taking the medication. So while the goal is to help develop healthier habits, willpower just plays a huge role in maintaining your progress. I've been on this weight loss journey for years, and it's been an up and down experience for me. So the real test will be maintaining the healthier habits long term, even after you stop taking the medication. I guess for some people, they're just going to stay on it for the rest of their lives. That's their plan. But without question, the use of these drugs is changing the game. The big question is, how will companies like McDonald's and Pepsi and Hershey's, who are already dealing with their own challenges, adapt to the prospect of more people using less of their products? See, I'm still a customer of all of these brands, but just nowhere to the degree that I used to be. For McDonald's, this is a brand deeply ingrained in the culture. It's one of those companies that has a resilient business model that has stood the test of time. McDonald's is all about convenience and affordability. It's a go-to option for people looking for a quick meal that, while isn't going to blow you away, it's decent enough. And they have a global footprint. I mean, McDonald's is everywhere. And they've done an excellent job at expanding their digital footprint with their easy-to-use app and delivery options. Now, the big question is, are GLP-1 drugs going to change anything for McDonald's? I checked out the McDonald's investor website, and I didn't find anything specifically addressing this concern. I did come across a clip from the Today Show featuring McDonald's U.S. President Joe Erlinger. Now, in the interview, he talks about how the company plans to adapt to shifting consumer preferences, and spoiler alert, they don't seem too concerned.
Another kind of unrelated question,
Sure.
but a lot of people, we've done a million stories on people on Ozempic, people who are on these other things, which is, changing the way they eat, changing their behavior patterns. Do you think that that plays into your bottom line?
We will always stay connected to where consumers are. If you had me in the studio 4 years ago, we would have been talking about COVID and everything McDonald's was doing to serve a Big Mac safely. So if customers move to taking more products like Ozempic, we'll make sure to be there for whatever needs they have coming from restaurants like McDonald's.
Is that like the opposite of supersize?
We'll take a mini burger and a tiny fry.
It could be. There could be more snacking. There could be more protein. That could be one of the things that manifests itself in our industry.
It's huge. I mean, these weight loss drugs have changed so much of the food, the grocery industry, the diet industry, certainly the fast food industry. Have you noticed it?
We haven't seen it yet, actually, in our numbers.
Okay. Wow. Joe Erlinger, thank you.
Now, Erlinger makes a solid point about how McDonald's is always looking for ways to adapt, and even mentioned the possibility of introducing some higher protein options to meet the demand from health-conscious consumers. Speaking of which, hey, McDonald's guy, if you're watching this, how about bringing back the grilled chicken sandwich in the US? That was a solid option, and it's gone now, replaced with a bunch of fried chicken sandwiches, which are fine, but for those of us eating a little less, we need more protein. But back to Erlinger's point, McDonald's has consistently demonstrated an ability to adapt to their challenges, and they've proven their resilience over the years. As the clear leader in the fast food industry, what they do is going to set the tone for their whole sector. So is McDonald's stock one we could consider buying right now is a question. McDonald's is a massive company, market cap of $205 billion, with over 43,000 restaurants worldwide. In fact, they project to grow this restaurant count to 50,000 by 2027, signaling that they don't anticipate any slowdown in their global expansion. This kind of growth trajectory is impressive, especially for a mature company like this, especially in the face of challenges like shifting consumer habits, the potential of the impact of GLP-1 drugs. Now, when it comes to McDonald's stock, things have been a bit rocky. Over the last year, shares are down about 5%, and right now McDonald's is trading around its 52-week midpoint. So while the company remains a powerhouse in the fast food industry, the stock itself hasn't seen much growth lately. Given this, is McDonald's stock something we should be considering buying right now? Let's take a brief look at the numbers and decide if this dip could be an opportunity or a sign to wait for a better entry point. McDonald's currently trades at a forward PE of 23.3. It's a slight discount compared to the 5-year average PE of 25.5. McDonald's has historically traded at a premium, and note the consumer discretionary sector as a whole trades at a PE of around 15. And the valuation is relatively attractive. Based on this, we can expect a share price to fall between $279 and $341. The current share price of $285.46 puts it on the lower end of fair value. While this might not be a bad entry point, personally, I would like to see it dip a little lower. However, if you are a believer in McDonald's and plan to just hold it for the long term, I don't see anything wrong with picking up shares at this price point. Now let's look at McDonald's valuation through the lens of dividend yield theory. The current dividend yield stands at 2.48%. This is slightly higher than the 5-year average yield of 2.29%. And this puts McDonald's yield pretty close to its historical norms. So I'd still personally like to see the share price drop just a bit if I was adding to my own position in my dividend growth income portfolio. Now, based on dividend yield theory, the fair valuation for McDonald's is in the range of $278 to $340. Its current share price of $285.46 is sitting in the low end of that range. So there's no doubt McDonald's it's been a fantastic investment as a dividend growth stock. With a 47-year history of increasing its dividend every single year, McDonald's has been delivering solid growth with an average annual dividend increase rate of 8% over the last 5 years. It's only a few years away from achieving that coveted Dividend King status. Simply Safe Dividends rates McDonald's dividend safety as a 77, indicating the dividend is safe and unlikely to be cut. McDonald's payout ratios are 58% of earnings and 68% of forward free cash flow. They're slightly elevated, but they're not alarmingly high, and they're actually better than McDonald's typical dividend coverage over the past decade. Wall Street analysts have an average price target of $322 for McDonald's, indicating about 13% upside from where shares are trading today. Personally, I'm hoping it drops that 13% so I can build my position a little more. McDonald's is considered one of the best for a reason, and I don't think GLP-1 drugs are necessarily going to hinder this company. They've shown time and time again they know how to adapt, and I expect them to do so in this case as well. Like, they could bring back that grilled chicken sandwich, and I'd be going there a lot more. All right, let's shift gears and talk about some other companies that I think could be affected by GLP-1 drugs, like PepsiCo and Hershey's in particular. These are two leaders in their industries and have built strong brands that people continue to turn to in their everyday indulgences. However, as more people turn to GLP-1s for weight loss, these companies could see their sales and consumer behavior shift in ways that we haven't seen before. Whether it's the sugary drinks from Pepsi or the chocolate treats from Hershey, both have been staples in the American diet for years, but with changing habits, will they be able to adapt and maintain their growth? Unlike McDonald's, these are two companies that are trading at a serious discount, and they could be considered undervalued. So let's break down why that's the case. By price to earnings ratio, both of these companies are trading well below their historical averages. Pepsi, which like McDonald's has historically traded at a premium, has seen its PE drop from an average of 24 to a current PE of 17.8. Hershey's has experienced a similar dip in its PE ratio from an average of 23.6 over the last 5 years to a current forward PE of 19.2. So that could present a compelling opportunity for investors looking to buy these consumer staples at a discount. But we have to consider the impact of GLP-1s and changing consumer habits. Looking at dividend yield theory, we see a similar story. Both Pepsi and Hershey's appear undervalued. Both companies are currently offering starting yields significantly higher than historical averages, with each yield starting at about 3.6%. For Pepsi, that represents a 26% increase above its historical norm, and for Hershey's, it's a 74% jump. And if these stocks were to revert to their historical yield levels, these prices would be significantly higher, making now a potentially solid time to buy. And these are both extremely solid dividend growth stocks, among the strongest in the sector. Pepsi is a dividend king with 51 years of paying increasing dividends and a 5-year average annual dividend growth rate at 7%. Hershey's has a dividend growth streak of 14 years, and get this, 94 years of uninterrupted dividends with no dividend cut. Hershey's also boasts a stellar dividend growth rate at 10% average annually over the last 5 years, with its latest raise at 15% last year. Now, can we expect this kind of growth going forward? I think even if it slows down for both these companies, their track record speaks for itself. And today is an opportunity to pick up both at high yields relative to their historical norms, so the dividend growth wouldn't matter quite as much. However, it's important to note that these companies, along with others like Mondelez International, Coca-Cola, they've been grasping with rising costs. Mondelez and Hershey's, for instance, have faced a sharp increase in cocoa prices, and Simply Safe Dividends actually downgraded Hershey's dividend safety score to 80 last year. Still safe, but it was a downgrade. Now, outside of these GLP-1s, these companies are also contending with broader economic pressures. And when you look at products offered by companies like Pepsi's and Hershey's that are loaded with sugar and sodium, it raises important long-term questions about the future sustainability in a world where health consciousness is on the rise, as is Ozempic. Now, as for Pepsi, I found an article from September 2024 where the company addressed the looming threat of GLP-1 drugs like Ozempic and Wegovy. CEO Ramon Laguarta, hope I said that right, Ramon, noted in their Q2 earnings call that while they've observed a shift in consumer behavior, more value-conscious and cautious spending as the American consumer has been dealing with inflation, they haven't seen any material impact from GLP-1s on their bottom line yet. Now, currently less than 1% of Americans are on these drugs, but a study by Morgan Stanley in late 2023 projected that by 2030, we could see 25 to 50 million Americans taking GLP-1. Now, the high cost of drugs is still a barrier for many who could benefit from them, but as access improves over time, it's something Pepsi and other countries in the consumer goods sector will need to watch closely. And I do think companies like Pepsi and Hershey's, they got to make a shift in the long term towards more health-conscious products, and I believe their management teams are aware of this. With their long history of navigating challenges, they're going to figure out how to thrive, most likely. But I have to say, I do think there's more risk in a stock like Pepsi or a stock like Hershey's today than there was, say, 10, 20 years ago. What do you guys think? Do you see weight loss drugs changing the landscape of your favorite dividend stocks? Do you know anyone who's dropped a significant amount of weight taking a drug like Ozempic? Let me know down in the comments. And make sure you are subscribed to catch our next video where I'm going to highlight every single purchase I made in my taxable dividend growth income portfolio and in my Roth IRA for the month of January 2025. That's coming in just a couple days. In the meantime, check out 3 more dividend stocks that have just boosted their dividend payments and look undervalued. So until next time, my friends, keep investing.